By the way, let me start by saying that I had my money in SVB. We tried to get it out on Thursday, and the wire said approved and processed. And then overnight, the bank was taking over FDIC, and we never got our money out. Or not Friday, but then, of course, we got it on Monday. The US government acted really, really fast. And that's why the FDIC exists, and they run like a clockwork. A lot of people said banks are even more secure today, or they have more trust from people after SVB, because they saw how fast the FDIC replied. So I thought that was amazing. But second, people don't understand that the Fed created that SVB went under. So a bank usually has deposits and then makes loans or investments. And the idea is to balance out the amount of deposits you receive and the amount of loans that you give. Because after COVID, there was a lot of money in the economy and venture capital exploded. There was all this money being raised by venture funded companies, put in AI, and their deposits went really, really high, and their loans did not grow as fast. And someone in the bank tried to do the right thing and put the money on government bonds, but it went from 163 when they purchased half of their portfolio to 5.5. And of course, you're losing 3% or 3 billion a year. And that's what really made SVB went under. It started with the regulators that the Fed raised too fast. We've never seen that. But then interestingly, the same venture capital community that put their money in SVB, those are the ones that created a run on the banks. SVB had a problem of too much concentration of deposits of the same type of client. Usually, if you're in the industry of real estate, the real estate companies have their deposits in all type of banks. In this case was all the concentration. 50% of every venture funded company in the US, we had our money in Silicon Valley. There was a lot of concentration, and the same venture funds created the run on the banks. So I think it was a mistake and a problem of the same funds that they created the problem. If the funds would not have asked other companies and they would not have all this concentration, SVB would have never gone under. It would have not gone under, but raised money or other thing. But it was because the Fed raised too fast, and then the same venture funds created the run on the banks. Technology makes everything faster. And as fast as you could make money, and we're making money really, really fast, you're making billion-dollar companies in very few days, the same will destroy it or move it very, very fast. Yes, we have a combination of everything is moving faster, and communication moves really fast. When one venture capital fund told their portfolio companies to get their money out, in 20 minutes, everyone else knew about it. And we all went to get our money out. Silicon Valley had 200 billion in deposits. And on Thursday morning, they had over 40 billion being debited in the same day. The Fed took over SVB, but then there's still assets in SVB that they have a value. They have certain enterprise value. And a bank came and bought them for pennies on the dollar. Let me run through this. One of the other banks that went under, their stock was worth 30 billion in January. The night before, on Friday, it was worth 8 billion. And the stock was purchased for 2 billion the day they went under. I think it was First Republic. Imagine you own a bank and you think you're worth 40 billion, or you have your stock worth 40 billion. 3 months later, it's worth 2. So that's how fast things are moving today. The valuation was too high, but that with the market plus what happened, you got what you got. Things are moving very, very fast because of technology. One of the things that is moving very, very fast is valuations and interest of people. We saw OpenAI, and we're going to talk about more about OpenAI later, but how they got to 1 billion clients in like 14 days, right? Technology makes everything move faster in the good and in the bad. In this case, it happened in the bad. And information is moving too fast. And of course, people are moving money with just a click, and that's creating things moving really, really fast. What you should have done is be able to adapt other regulations, systems, and processes or procedures to be able to recognize that. And here as an example, the constitution of every country was written before the internet existed, right? We still run all our education, all our political processes, social stuff with things written 50, 100 years ago. And we're expecting for them to all operate and run well today. No. Peter Seihan has a book called The End of the World is Just the Beginning. And I love the title. I think he nailed it. The systems and processes and the world economy that we have built It's expiring now, and we're doing a new model moving forward. And you have to destroy the old model so you could really build the systems and processes for the new world. And that's why that book is called The End of the World is Just the Beginning, because you need to end the old world so you could start a new world in the future. Well, that's part. And by the way, for me, this goes back to what Steve Jobs said at the Stanford commencement that has had billions of views and went completely viral. One of the best things in life is death. It's part of life. If we don't die, we will never give an opportunity to our kids and next generations to make money and do things. It's part of life that things have to be born, grow, develop, have an impact, and then die. Same thing happens with economies. Same thing happens with markets. The problem is that today is moving much, much faster. And the systems and processes that will run that, they're not adapted to the speed of technology of today. But it's completely normal that things have to die before you start again or you get reborn. Let me talk about a recession or a crisis in the market. And let me do an analogy that I think is very important. If you see a forest, the forest gets burned often, right? You have these really big trees that they get a lot of water and all the sun and the nutrients, and then you get a lot of weeds. And all the weeds, they're really not adding any value, and they're taking a lot of nutrients and water from the big trees. You need to have a fire often to remove all the weeds to keep the trees. And sometimes some of the big trees get burned. But when you get a fire, a lot of the big trees stay. They get hurt for some years, but then they recover. And they are even stronger after, because now they have way more water and nutrients in the soil. That's exactly what happens in the economy. You have some companies that are really strong and really adding a lot of value, and you get a lot of weeds. The amount, we call them now the zombie companies. The amount of zombie companies in the world, it's crazy that they just live because they raise money. And a good mentor of mine, an investor of mine, said, Daniel, it's easier to convince one investor to give you $1 million than to convince 1 million clients to buy from you or 10,000 clients to buy from you. So the entrepreneurs that do the right thing and figure out how to create value in the market, even after a recession, they're still going to be there. The fall of SVB was, yes, indeed. I read an article that I thought it was very interesting, that someone said that the fall of SVB was going to help have a softer landing of the economy, because something that doesn't kill you, the full economy, makes you stronger. We're making stronger changes in our business today, and a lot of business owners are making changes that if we have a recession in the next 6 months or a year or whatever, we're going to be stronger. And that will allow for the economy to have a softer landing. Yes. And we will learn, we hope we'll learn from the collapse of SVB, and companies will not have $2.7 billion in a bank account like Stripe had. And you're going to diversify your money. You're going to buy money market and other things to diversify your money. So yes, I think it's going to be much better for the economy, the downfall of SVB. Economy as a whole, and I really believe the whole economy of the world and the business of the world, we're learning from that and being way more diversified and cautious the way we put our money in the banks.